In this video, I'm going to be very briefly talking about the standard deduction. You can check out part 11 of the series for the basics of the standard deduction, because in this video, I'm assuming you know the basics of what the standard deduction is and how it impacts your taxes, and I'll be diving slightly deeper into it in this video. So you should know that for those who are 65 or older, the standard deduction is actually increased, meaning their standard deduction amount is more than the normal standard deduction amount. This means that seniors are allowed to deduct more from their taxes if they elect to use the standard deduction than what is typically allowed. So that is allowed for people who are the age of 65 or older. Also is allowed the case for an increased standard deduction if you are blind, and if you are over the age of 65 or 65 and blind. If you are both of those things, you get a bonus deduction. So those things can actually add up and increase your standard deduction by even more. So how it works is that you have a baseline standard deduction for normal adults, but this deduction amount can be increased if you are 65 or older, or if you are blind, but it can be increased by even more compared to those who are just 65 or older, but are not blind, or for those who are blind, but younger than 65, if you happen to be both 65 or older and blind. Now, who can take the standard deduction? Well, the answer really is anyone except for these two provisions. So if you are married, but you decide to file married files separately, if your spouse itemizes their deductions, you cannot take the standard deduction. You too have to take the itemized deduction if your spouse itemizes and you file married files separately. This is done actually to prevent you from taking full advantage of the tax system, whereby your spouse maxes out on all the eligible itemized deduction, while you realizing that if you too itemize, there won't be as much deductions left over because your spouse took it from you, decide to take the standard deduction instead. So it's an unfair advantage, where you're able to really take both the standard and itemized deductions and get the benefit of both. But remember, you're only allowed to take one. You can only get the benefit of one of them, not both. So it's a way to close out the unfair advantage given to married taxpayers. Next up, if you are neither a U.S. citizen or a U.S. resident, you're not allowed to take the standard deduction. Unfortunately, this is closed out to foreigners. It's really only a U.S. exclusive kind of thing if you want to take the standard deduction for U.S. federal income tax purposes. One last thing to keep in mind is about dying. So if you die during the middle of a tax year, let's say in July, you're still allowed to take this full standard deduction. Your standard deduction is not reduced by anything, regardless of when you died during the tax year, so it's still the full standard deduction amount. You'll still be able to take the full standard deduction amount. So you won't have to divide your standard deduction by half because you died halfway through the year. You don't need to compensate for that. Regardless, you get the full standard deduction. Hell, you could die on January 1st of the new year, and you'll be eligible for the entire standard deduction, even though you were only alive for one out of the 365 or 366 days of the tax year.